Every so often, there are great bubbles that appear. Every single time, there's euphoria behind them. This bubble is the biggest the world has ever seen and has unlimited mania behind it. Anyone suggesting that this isn't a healthy market is laughed at. Anyone pointing to the absolutely any metric that they can find is considered a joke. But what is the consistent theme here? It's the Fed. The Fed will save us. The Fed will tuck me in at night. The Fed will make all of my worries go away. But the truth is that the Fed hates you. The Fed was created for the elite by the elite. That's the same elite that never seemed to show up on the Forbes richest list. Interesting. You came here for the truth, so let me unveil that for you. Today we're going to talk about hyperinflation. Could it go this direction, or do we have deflation? Obviously, with what the central banks have been doing, with what the Treasury has been doing, and you look at all the governments around the world, same exact pattern. Expand the deficit, expand the debt, get all out of whack, and do it in order to fill in the gap, fill that's right here now, because everything is shut down. Now you look at what has happened historically. Whenever this occurs, it ends badly. But this is the way that they're acting, and this is what we have in front of us. So we have to be able to decide what is the direction of this market. We have to understand what's going to happen to the economy and make decisions based on that. Nobody knows, okay? Nobody is able to actually predict the future, but we have to know where to put our money. So I'm going to show you what the pros, the so-called pros, had to say, and then I'm going to show you what's happening with the retail investors. Now, if you look at it statistically, ultimately it does not end well for people who are overexposed and over-leveraged and do not hedge their bets and do not diversify. And I think that is the message that we need to learn, that in any time, at any point, there could be change, there could be a correction, there could be something that happens to your portfolio. And if you are not ready, if you're not prepared, you will really suffer the consequences. Investing legend Jeremy Grantham had actually made it known just a few weeks ago that what we're looking at is the biggest mania the world has ever seen is going to end badly, and now he's gone even further. He's taken it up a notch. Now that doesn't mean just because he said this that it's going to occur. He has really at this point said a lot would happen, and we're still here. Now 2021, the bubble is growing further and further, but let's take it for what he says and we'll move on. We will have a few weeks of extra money and a few weeks of putting your last desperate chips into the game, and then an even more spectacular bust. When you have reached this level of obvious super enthusiasm, the bubble has always, and this is the key point, without exception, broken in the next few months, not a few years. And so nobody really knows what the activity really will end up to be and what triggers this and so on. But ultimately, we see that there are periods of time throughout history when we are at a permanently high plateau, and then next thing you know, it pops. There is something that is very clear. The markets, the whole thing, the whole financial system operates in this up and down pattern. But what I have noted, and I've studied a lot of financial history, is that previously you would have this smaller waves and, it would kind of just move and move. But now what's happening is they are getting more exaggerated and more exaggerated as time goes on. Big ups and big downs. And that does not end well for average people, because they usually get wiped out in the process because they buy in too close to the top. Oh yeah, they might have bought some down here, but ultimately they see the euphoria. They are watching their friends getting rich. They're so rich. Oh, I see the comments. I made 250,000 this year. I made 500,000 this year. I made 100,000 this year. You're garbage. I hate you. But of course, they keep doing this. this, and they keep buying, they keep buying, they keep buying all the way down because these are great deals right around here. Well, unfortunately, they didn't know how to hedge their bets. They didn't know how to actually diversify. And so they just go all in. That unfortunately does not end well, because if you look at the NASDAQ, for instance, back in 2000, took about 14 years to get back to where it was. Now, if you are looking at it on the whole, sure, the market went back to its level 14 years later, but how many of those companies survive? What, Microsoft, maybe some others? Was Cisco anywhere near there 14 years later? What about today? Is that one of the biggest stocks today? No, it's not. So you don't know what happens along that period of time. That's my whole point. It's that, okay, I'll just buy and hold. You don't know what's going to happen throughout this period. Look at ExxonMobil. I use this example all the time. 2013 is the biggest company in the world. Today, wiped off the index altogether. All right, let's move on. I've got a couple charts on this too, but let me show you what they have here first. Bank of America warns U.S. policy is fueling a bubble in Wall Street prices. I think that's really, really obvious at this point, and didn't actually even need to say that. But anyway, DC's policy bubble is fueling Wall Street's asset price bubble. When those who want to stay rich start acting like those who want to get rich, it suggests a late-stage speculative blow-off. Now, that doesn't mean we're going to have a collapse tomorrow. That does not mean that what Michael Harnett had to say, that it's going to be something that is, you just got to take everything. You just sell right now. You sell everything you've got and you just take all the money and you hide it under your mattress. No, listen to what he had to say. The strategists predict a market correction and for positioning to peak in the first quarter, indicating a sell signal here. Soaring market prices as investors boost inflation-linked trades will drag Main Street inflation higher, risking a taper tantrum, tighter financial conditions, and volatility in events. They highlighted past bubbles that include the dot-com and the housing market bull in 2007 and 2008. A correction, we're talking about what could be as little as 10%. These events happen all the time. But the point here is that we don't know what occurs. Just because the whole market comes down by 10%, you could have your individual stocks coming down into a bear market. It could be down 20%. It could be down 30%. But what occurs? Maybe there's a huge high-flying stock that is just soaring in your mind and towards the top and throughout these periods, and then the market sort of takes a dive, and then the whole market starts to rise from this point. However, certain stocks may just go sideways for years. You never really know what's going to happen because, of course, things are constantly changing, and we are finding it very difficult to understand the market when you've got the Federal Reserve manipulating it, controlling it, and ultimately weakening everything because there's no price discovery anymore. Price discovery is essential for investing, and yet today that's gone. It's not going to be something that people like, though, in the future at some point. That could be next year, could be 10 years. I don't know when that's going to happen. The point is you need price discovery there. You need to be able to, if you touch that hot pan, you need to feel that you're getting burned. This is important. I think people are laughing at the wrong things today. They're, as they say in one article I got pulled up here, that they're smiling, thinking, oh, it's great. My home is just increasing in price. No. When you touch the hot pan, when you touch the hot oven, the hot element, when you put your hand in the fire, there's a reason why you feel pain. It's not there just for fun. No, that's to tell you that this is not good. This is bad. It teaches you a lesson. But today, that's not happening. Big problems here. Fueling bubbles, Fed monetary policy has been supportive for risk assets, and you could see right there, I mean, come on. The Fed's balance sheet continuously increasing, and that's correlating to the S&P 500. As you can see, these two charts, I pull it up all the time, but ultimately this is so key, so important to understand what's going on here. But no, I keep hearing people all the time, no, these two are completely separate. So you take what you want. This article here is talking about the euphoria and what's happening with retail buyers and what they've been doing. There's quite a bit in here. I just want to cover one point from it. There is a lot of volume in low price stocks, $2, $3 obscure stocks where volumes have exploded. That tells me that people are chasing momentum. They move because they start moving. People start talking about them in the chat rooms and they move. They're talking about how it's not just names like Tesla, but certainly that has been one that has been going up like crazy. There's still phenomenal interest in options, particularly short-dated calls. Those are options with the longest odds against the buyer because they decay so rapidly, but they keep working as long as the markets and individual stocks keep going up. And that's what's happening today. You're seeing that a lot. Right now, people are getting into that. There's a lot of content being generated around that. You got to do options. You got to do options. It works when the market goes up, certainly. That's absolutely true. Just like when you're buying on margin. Everything's fine. As long as the stock market keeps going up, it works. When the stock market goes down just a little bit, you start to have problems. Our clients always make money when the markets go up and lose money when the market goes down. But for the past 5 days or so, it's been the other way around. And that was, of course, a little while ago. But it's just giving us this idea that people are suddenly becoming so professional and even claiming that they are better than the professionals. But ultimately, we see it through the cycles. If you haven't even been investing through at least 2 cycles, you don't know what's really going on. And that's where the caution is. That doesn't mean you don't put your money in. I don't know why there's, this sort of fallacy that I tell people not to invest. You do whatever you want. I don't give financial advice, but we have to look at it objectively and just understand what exactly am I getting myself into. That's all. That's all for this video. If you found it informative, all you have to do is click a button on your screen. It's the like button or the dislike, the down button. Do it if you want. Either one. It's all good. Thank you very much. If you want to learn how to sell stuff online, you want to be able to actually produce an income for yourself, I have a free e-course, the AmazonGPS.com, where you can start to learn today. And if you want to know about the financial system, you want to get things right. I'm talking about the foundational principles all the way up to the asset classes and how to make money. This is what you need to know. It's these 2 books. Link is in the description. And if you want the audiobook instead, themoneygps.com. But hang on a second. Wait a second. Have you seen this video? If not, you definitely want to check it out. Click it. I'll see you there.